Okay, Bill Soriano here again. It is Monday evening, 1/22/8/2018 at about 6:50 p.m. So again, here's the trades that I posted in my group, the Forex Trading Authority group here. I don't know how many of you guys are actually listening to my videos here, but I'm just going to keep making them because I think they give value and they give people some good idea on what to do. But anyway, again, I had two bad trades. This happened to me last week as well. I took two bad trades this morning here in UJ and EN, and I was down I got stopped out down about 30, 33, $34. And what I'm telling you guys, what I said last week is when you get stopped out, that's okay. You made a mistake. You didn't look at it right. This is how you learn. You have to go back, look at your charts, find out what you did wrong, reevaluate the situation, and then find an entry point to get back in to get your money back. You don't go run and hide. You don't go cry to your moms, or your dads or whatever, or your husband or your wife or significant other. You reevaluate, you study the charts, you find out what you did wrong, and then you get back in. And when you get back in, you double down. You see this? I doubled down. Now, these two trades were, I got in these trades as close to the top or the bottom as I could. And really, I only I lost 21 pips on this one, and I lost 20 pips on this one. Okay. Now I was able to get back, so that's a total of 40 pips, 41 pips that I lost on those two trades. I was able to get back 26 pips on this trade here, but since I doubled down, that's what I tell you guys to do. I took a 0.20 lot size. I got my money back, plus I'm $4.32 in the profit. Now I know we're not going to get rich with $4.32, but you know what, guys? Here's the deal. This is something that you have to learn how to do. Now I know, and I'm going to make a video later tonight where we're going to go on Facebook. We're going to see all these people that are posting their trades like this, and they're all winners. They're all winning trades. There's no losing trades. And you know what, guys? Let me tell you, you can't win every trade. Okay, don't get me wrong. If you study your craft, if you study it for a few years and you're good at it, you can win 80 to 90% of your trades, but you're not going to win every single one. Okay, and so I'm not saying these guys are lying when they're posting their pictures of all their wins with no losses, but we know that maybe they're not posting when they lose trades, or maybe they're photoshopping their pictures, or they're cropping their pictures so that they only show the winning trades. I don't know. I don't care. My job is to learn how to trade the Forex market so that I can be able to use the money that I make to retire early to get the things that I want. Okay, now I know that's only $4.32, but again, this is a learning process. Okay, and you have to use a live account in order to do this correctly, because you don't have the same emotion connected to a demo account. So I know it's only $4.32, but the point I'm trying to make here, guys, is when you get stopped out, it's not time to run and hide. You look at your charts, you figure out what you did wrong so you know next time not to do that. And then you reevaluate the situation, you find out where you need to take a re-entry, and you double down so that you can get your money back with less of a move. And I'm going to show you why it's less of a move here in a second. So let's go to the actual chart. You see here UJ. I sold UJ, and I have on the chart here, I have marked where I sold that. Okay, so what's happening here is I've been trying to come up with a trading style or a trading method to use during the Asian session. Okay, now what happened was I seen this this big candle here, which throws a big pin to the upside, right? It moves up here. There's a big pin to the upside. I see the mayonnaise right here. It's sitting right on the 200-day moving average. I call that the mayonnaise. And so what happened was I had missed that, and when I checked the charts here, I decided to get in short right here. Now what happened was, and I posted this in the group too, I got in before the Tokyo cross, right? I didn't wait for the yellow mustard line to cross the red ketchup line down. I decided to get in early. So I got in early. It moves around here. It goes up a little bit higher here as we come out of the 1 a.m. Eastern time candle right here. This is about 1 a.m. This box here is what we call the Asian box here, even though it starts at 5 p.m. and it goes till 1 a.m. So what happens is now we do get that cross, and it does go back up again, and it drops a little bit. So I got in right around here. And so, I might have had a 10 or, 11 or 12 pip gain at this point, but that wasn't enough to get out. And I thought that was going to continue to go down. Now, the one problem was there was news. If you go to Forex Factory, there was a lot of news on JPY, and there was no time by it. Okay, so I didn't know what time it was going to go off. And basically what happened is, this goes back up, it drops back down. I actually was thinking about getting out right around here. I didn't, and then it makes this strong move up and stops me out. Okay, so first of all, this was a trade that I really shouldn't have taken, because I'm just, like I said, I'm trying to find a technique to use during the Asian session, and and I'm having some difficulty with it. But I took the trade. I could have gotten out with about a 10 pip gain here, but I decided not to. Now, what happens here? Look at these three big green candles. There's one, two. This one right here, this pin at the top, is actually a green candle, completely green at one point, and then it drops down and closes right here. And this all happens right on the blueberry pie, which is the 800-day moving average. Now, I was away from my home at this time, so my charts that I pull up, I couldn't see that this was right on the 800-day moving average. Also, it's right here at yesterday's high. See this dotted line right here? So had I seen all that, I would have known to take this right back down. Okay, that's what I say. You look at what happened, you see what you did wrong, and then you reevaluate and you find your time to get back in. Now, what happened was I didn't have all of my chart information in front of me, and I couldn't sit by the charts. So what happened was right here, even if that pin right there at the top is the first sign that you should now take that back down to the water. And look, it goes right back down to the water. Goes a little bit further, actually almost touches the mayonnaise. But we know that when we take a counter trend trade, we're supposed to go back to the water. Okay. Now, the reason why I didn't jump in this where I was at, because I didn't have access to know that this was on the 800-day. If I would have seen that, I would have taken the trade right away. And I didn't see three clear moves up. Remember, on the counter trend trades, we're looking for three clear moves up. But what you do have here is a vector 3, which is a vector acceleration up, and then the move back down. Anyway, right here where you get the railroad tracks, see how you have the green candle going up, the red one going down? That tells you to get back in. Like I said, I wasn't at my charts though at the time, but we could have taken that back down for about a 20 pip gain. Again, we would have doubled down to get our money back. But we were lucky enough to get our money back, or not lucky enough, but we were skilled enough, I should say, to get our money back in the EN trade. So here's what happened with EN. So this is like a normal trading scenario. We're coming out of the Asian Asian box here, and we're looking for a vector move, which is a strong move, right? Similar to this. See these three candles? We're looking for three candles. Okay, they could be all together, 1, 2, 3, or sometimes there's a couple candles in between each one. But it's relatively, between 3 and 6 or 7 candles where it makes this vector move up, and you see three big. See how you have three big candles? 1, 2, 3. This was a green candle all the way up here, and then it closed down there. Okay. And again, the fact that it closed down below the 800-day tells you to get right in it. But I couldn't see these charts where I was at this time of day, unfortunately. So anyway, we're looking here. Now, all of a sudden, we get a move down to here. And again, This isn't a vector move. There's no vector move here. As a matter of fact, this is the move that the market maker is trying to make here. He's going down, right? He moved up here. He got people trapped, so to speak, up here. At this point, this was at the start of the day, 6 p.m. Eastern Standard Time yesterday, and he's making his move down. So again, once again, what I did was I took a long position on this candle here, and I stepped right in front of a freight train that's moving down, okay? So I get run over, right? On this candle right here, I get stopped out. And then, so what do? I look for a place to get back in. Now, at this time, I was able to sit by my computer to see where to get back in. So what happens is now we're coming up on the New York session here. So now what I'm looking for is I'm looking for a bottom. I'm looking for like a hammer, where there's a big pin thrown down to the bottom, right around the 9:30 to 10:30 a.m. time frame. So what happens is I'm watching, I don't really get it here. This isn't really a hammer. This is an inverted hammer, but this is going the wrong way. This is telling me it's going to go down further, which it does. Here's a big candle down. Right here we get a bottom. We get a pin down to the downside right here. See how this is like a doji? It closes right where it opens. And there was a big move down and it retraced. So that told me to get right back in on this candle. Now, what am I looking at? A couple things. First of all, I see 1, 2, 3. I see 4 pushes, 4 intraday pushes down, right? Now, EN has an average daily range of 138 pips. If you look here from the top to the bottom, right, this moves 126 pips. So almost equal to the daily range. You want to see at least 90% of the daily range, which, you'd like it to equal the daily range or more. But in this case, I seen 4 clear moves down. I got the candle that I wanted right at 10:30 a.m. So I got back in right here. And again, what's my goal? It's a counter trend trade. Okay. So I'm going back to the water. Okay, and what I did was I got out right at the water and I got the 26 pips. Now it did go another 10 pips here, but see how it throws a pin here up? It doesn't get close to the 200 day, the Mayo line, the white line's all the way up here, and then it drops. Okay, so you have to watch this very carefully when it gets around the water, when it's coming back, because a lot of times it'll throw a pin up and then it will pull back. I seen it do that. I got in, I got out, I think, on this candle here when it was right up against the water, and then it did pull back, but then it did eventually move higher and then do the pullback up here. But your goal is just to get back to the water. It's a counter trend trade. I lost money on the first trade. I got run over, so I doubled down and I got my money back. And there it is right there. It was 26 pips up. Back to the water. So I took it back to the water. So again, it's unfortunate that I made 2 bad trades here. This one I really stepped in front of a freight train because this was clearly going down. Again, I'm supposed to be looking for vector 3 moves coming out of this Asian range box here. And a vector move, like I said, looks like this. These 3 big green candles going up or else going down. But you want them to do that, in this area here. Like sometimes they do it in the last third of the Asian range box, which is fine. And then sometimes they do it when they're just coming out of the Asian range box. And then sometimes they wait until after the London Open here. Okay. But I didn't get that here. I got in the trade right here, and there was really no reason for me to get in. I thought that this could possibly be the low of the day, because it formed a W here. But that's not enough. I also looked across here, guys, and I seen on Friday it also kind of made this low right here. But again, that's just not enough. You need to see a vector 3 move, and the vector 3 move is usually a false move. So in this scenario here with this moving down, we would be looking for a vector 3 move up and then take it down. But anyway, this is Bill Soriano from Pittsburgh, and I just wanted to make this quick video so that people know, again, if you lose your trades, you don't run and hide. You don't cry to your, husband, wife, significant other, whatever. You see what you did wrong, right? You reevaluate your charts and you find an entry point to get back in, and you double down so you can get your money back. Okay? Bill Soriano from Pittsburgh. Let's make it a great day trading Forex. This video is a little bit longer than I wanted to make it. It's about 15 minutes, but let's make it a great day trading Forex.